Good afternoon, everyone, and welcome to another Port Jackson Securities webinar. Today we're joined with Cobram Estate Olives, a very exciting brand. I'm sure lots of you have seen them on the shelves of Woolworths and Coles, but we're talking about something very different here. Rather than buying the olive oil, we're talking about potentially investing in it. So we're here with Sam and Leandro from Cobram. Just before we get into the presentation, Sam and Leandro, can you give me a brief overview of how you've both ended up at Cobram and what your roles are there?
Yeah, thanks very much, Aidan. I'll go first. I started my career as an accountant at KPMG and then worked in various roles in the corporate finance area. And I ended up at Cobram Estate around 12 years ago when it was really a turning point in the business and they were looking to acquire the assets that we now own. And I stayed on as CFO, and around 7 months ago was appointed the joint CEO with Leandro Rivetti. So I've been here around 12 years. Over to you, Leandro.
Yes, Sam. I'm originally from Argentina, where I sort of graduated as an agricultural engineer nearly 25 years ago. Always worked with research with olives, and moved to Australia to start working with Cobram right at the beginning, 20 years ago. Been in charge of all the technical and production side, for a while, until joining, Sam as a joint CEO about 7 months ago.
Yeah, and in terms, just to add to that, in terms of how we split the CEO role, Leandro broadly looks after the technical and growing side of the business. And I look after the finance, commercial being the sales and marketing side of the business. But of course, we've worked together and worked really well together for over 12 years now.
That's great to hear. And obviously you come from very different sides and different experiences. So hopefully you guys make a good team, and I'm sure we'll hear more about that throughout the presentation. So for the listeners, as usual, there's questions in the bottom right-hand side. Feel free to ask them throughout. And then towards the end of the presentation, I'll ask them. We might not be able to ask all of them. So if that's the case, feel free to email me or one of the team members after at Port Jackson, and we can do our best to speak with Sam or Leandro at Cobram to get those questions answered later on. Sam, I'll hand over to you now for the presentation.
No, thank you very much. And some of you may have heard of us. We listed on the Australian Stock Exchange in August this year. But we've been around for a lot longer than that, and we've been around well over 20 years, and we're now one of the world's largest vertically integrated olive oil businesses, with a business in both Australia and California, USA. Leandro will talk a lot more around the detail of our business model, but before we get to that, I'd just like to go through a couple of our recent highlights. We're a 30 June year end. For those of you that don't know, we've just finished harvest in Australia 2 months ago, and we produced just over 16 million litres of extra virgin olive oil. And just to put that in perspective, that's around 70% of Australia's production. In terms of brands, we have a 45% market share in the extra virgin olive oil category in Australia through our flagship brand Cobram Estate and also Red Island. We've seen really good growth the last 12 months or 24 months really in our packaged goods sales in the USA, with sales over $30 million reported this year. And really importantly, one of our key strategic focuses is to grow our brand across both Australia and the USA, and we grew that brand 8.5% for the 12 months just gone. Leandro will talk through the investment that we've done in our grove assets, both in Australia and in the USA over the last 5 years. But we continue to do that, and this year we planted an additional 110 hectares in the USA, and in Australia an additional 331 hectares. And Leandro will give you a better feel for what that means in the context of our overall asset base. In terms of financial highlights, just to put that in context, this year we reported a 2-year rolling average EBITDA of $43.7 million. And in future slides, I'll talk through the 2-year rolling average EBITDA concept and why that's really important. We reported a $33 million rolling average EBITDA if you include our early phase businesses that we're still investing heavily in, and a one-year EBIT of $70.3 million. To put our sales in context, our sales this year were $140 million. We reported a strong operating cash flow of $22 million, and water, Leandro will talk through in one of his slides, but it's a really important input cost to the business, and pleasingly water costs returned to below long-term average. I'll hand over to Leandro. Leandro is just going to talk through our business model and some of our key growth strategies, and talk you through, in more detail where some of that growth, we expect that growth to come from.
Thank you, Sam, and thank you everybody for being with us this afternoon. Look, over the next 7 slides, I would just like to share some of the key aspects of our business and to provide a better context for the financial and commercial results that will be presented by Sam at the end. The olive industry is a very fragmented and traditional industry, and in that context, just to give you an idea, Italy is the second largest producer of olive oil in the world, has 1.1 million hectares of olive groves and 1.1 million growers. So extremely fragmented, extremely traditional, low mechanization, low levels of scale. And in that context, our company has been for many years a world leader in terms of olive modern production of high quality extra virgin olive oil, not just by scale, but also in terms of low production costs and yields. And as Sam said, we are one of the largest vertically integrated olive businesses in the world. In terms of technology, sustainability, and cutting edge research. The Olive IQ, which is our proprietary production system that resulted for more than 20 years of practical experience, research, and innovation, allow us to produce effectively 9 times more oil per hectare than the global average, with a production cost that is 30% lower per liter than the world's weighted average, and with oil of the highest quality. That is usually an oxymoron, being able to produce the highest quality oil at the lowest price, but we certainly are able to do it, with the application of technology. And also, not less important, we do that using 30% less water as an average, 60% less nitrogen, and 80% less phosphorus per liter than the industry average, and offsetting the carbon footprint of a medium-sized city like Bendigo or Ballarat each and every year in Australia. We have more than 2.5 million trees planted between our Australian and Californian groves over nearly 7,000 hectares, with our 2 largest groves and mills at Boundary Bend and Boort in northwestern Victoria, amongst the top 10 of the largest olive states and mills in the world. To give you a better sense of that scale, our production of oil this year puts Cobram Estate Olives alone in a position to break into the top 10 largest producing countries in the world, with a total harvest higher than many entire countries like France or Israel or the USA, and several times larger than famous regions like Tuscany, for example. We can move to the next slide, Sam. As you can see, from the image and what we have been describing before, we are truly vertically integrated and tree-to-table business, controlling every step from variety selection and propagation of our trees to the growing, the harvesting, and the processing that we talked about, but also complemented by world-class laboratory and bottling facilities. But the weaknesses of the industry that I mentioned before really created the opportunities for Cobram Estate by being able to grow olives in a fully vertically integrated fashion at scale, at competitive prices, and with full traceability from tree to bottle. So we move to the next slide, Sam. When it comes down to summarize our growth strategy, these are our 4 core pillars, and they have been providing really great guidance to our employees and our shareholders for many years now. The number 1 is that we're expecting a gradual but consistent organic growth from the increasing yields of our Australian groves, mainly as a result of maturing trees and efficiency gain. In terms of tree age, remember that nearly 40% of our planted trees at the moment are not fully mature, and that includes 60% of them which are yet to produce a crop. And in terms of efficiency, most importantly, we carry out a very comprehensive replanting program that ruthlessly replace underperforming varieties with long-term proven cultivars, combined with a setup of, for example, more than 180 frost fans that, between other initiatives, are starting to show results, as I'm going to discuss in the next slide. The pillar number 2, we are committed to growing our vertically integrated business in the US, as we are encouraged by the really fantastic opportunity in America to replicate our Australian business. When we produced our first oil and when I moved to Australia 20 years ago, the consumption per capita here was just 1 liter with virtually no locally produced oil. 20 years later, the consumption has more than doubled, and the bulk of that growth came from domestic production, with Cobram Estate being the main driver of that. The current consumption of olive oil in the USA is almost equivalent to that of Australia 20 years ago, at 1 liter per capita, with under 5% of that consumption at the moment coming from local production. So obviously, the similarities are actually quite relevant, but the main differences and the great opportunities are that the total American market is 8 times larger than the Australian market, and that we have more than 20 years of experience now walking that path. The pillar number 3 is the fact that we will continue to focus on growing our branded sales and improving our net return per liter for our oil, through not just through passing price increases, but mainly through innovation, premiumization, and differentiation of the company's brands, not just in Australia but also globally, without compromising the trust that we develop with our consumers. And the last pillar, but not the least important, converting the substantial amount of investment that has already occurred with Cobram Estate Olives Wellness Division and its WellGrow brand into profit. Upcycling the different farm outputs, maximizing their value, particularly as renewable energy, animal feed, or most excitingly valuable nutraceuticals, is well underway, and we expect to continue shifting our attention from R&D to sales and marketing as the research and development of those new products reaches its final goals. Move to the next slide, Sam. Sam already touched on that, but our Australian yields in 2021 of more than 16 million litres of oil represent more than 70% of Australian production, and broke our own record by more than 2.3 million litres. But as you can see from the graph on your left, most importantly, we did so, and you can check that, not just from the production bars in brown, but from the purple line, we did so harvesting 1,000 hectares less of mature trees than in our previous record. This is a clear testament that some of the initiatives that I described before, like replanting program and the installation of a frost protection system, are clearly starting to pay off. Move to the next slide, Sam. Apart from harvest, our operations here in Australia have been busy completing the last 331 hectares of our redevelopment of the board grow. And over the past 5 years, we end up replanting more than 2,100 hectares, replacing all underperforming varieties that were imported back in the early days, in the late 90s and early 2000s, with varieties that are of proven performance after what we evaluated over the past 15 years. As you can see from the bottom graphs, as they age, those 40% of immature trees currently on the ground will drive the organic growth of our Australian production and supply over the coming 5 to 10 years at a compounding growth between 6 to 10% year on year. As you can see from the bottom right graph, olives produce its first commercial crop 3 years after planting, and that production grows linearly year on year until reaching maturity by year 7 or 8. We're not normally usually asked how long an olive tree can actually live for. They certainly can live for thousands of years, but from a commercial point of view, we consider a 40-year cycle with an ongoing replanting program of 2.5% of the area per year, so that the productive value of the orchards remains stable over time. And those years that you see there are already considering the discount of having at all times 5% of the trees in an unproductive age and 10% of our trees not at full maturity. In terms of water, and that's sort of that next slide that pop up there, We source our water in Australia from multiple points of the Southern Murray-Darling Basin, and since 2010, it has been our strategy not to own entitlement or what is called permanent water, but to source it from the allocation or temporary market, purchasing it throughout the year as required. For those that are not familiar perhaps with the management of water in the basin, it is important to highlight that owning entitlement water does not provide you security of access to water, as this will depend on the level of allocation of that season. For example, in a severe drought with only 10% allocation, you could only irrigate an equivalent to 10% of your entitlements, and you will need to outsource the remaining 90% in the temporary market exactly in the same way that we do now. Over the last 8 years, the company purchased an average of 5.5 megalitres of water per hectare and per annum at a weighted average price of $233 per megalitre. Accessing that required water was really never an issue, even during the driest years, and it only comes down to the price that you can afford to pay. And on that front, certainly, we have a return per megalitre significantly higher than most other agricultural and horticultural industries, and consequently being able to afford a higher bid when necessary. The past financial year, Sam showed, we pay an average of $168 per megalitre. And on the last slide, talking about the USA, consistent with our strategy, our productive area in California also expanded in this past financial year with the development of 110 hectares of olive groves in what we call our Esparto South Ranch, bringing the total plantings in the USA to over 300 hectares or nearly 150,000 trees. The consecutive years of drought in California led to a statewide water restrictions that impacted the availability of surface water for farmers, but we chose those locations for a reason, and our growers have also access to alternative sources of water, mainly through wells or bores, as we call them, that allow us to supply all the required irrigation throughout this current growing period, and we are already investing in additional infrastructure to increase our capacity and flexibility in the coming season. So I'll handle that now back to Sam, that will cover the remaining aspects with the financial results.
Thank you very much, Leandro. The first slide, which is really important to understand around how to think about or understand our accounting results. And olives are naturally biennial bearing, and that's a known and expected fact. And what that means is that typically you'll get a high cropping year like we had this year, will be followed by a low cropping year like next year or the year before. And under the accounting standards, we actually have to record the value of that crop in the year of harvest, not when it's sold. And we do that by estimating the fair value of that oil. We then deduct the actual cost of producing it, and we take that increment to account in the year of harvest. Now that then sits there as oil at that higher value, and then is taken through our cost of goods sales as we sell it. But to really understand the true measure of the business, you need to take into account both a high and a low cropping year. You can see the chart on the top left-hand corner shows the last 4 harvests. So in the green is the oil harvested, so 2 high cropping years and 2 low cropping years. The light blue bar is our reported profit, and you can see that goes up and down with the harvest volume. And the red bar, which is how we think about our business performance and how we encourage investors to think of business performance, is the 2-year rolling average EBITDA. So taking into account both a high and a low cropping year. The reason our sales don't go up and down as like our crops do with the biennial bearing is because of the way we manage our oil. So a high cropping year like this year, we will supply the market for around 16 months, and then a low cropping year like next year will supply the market for around 8 months. And that's because our customers buy oil very consistently from us month in, month out, and there's really no seasonality. So we're able to manage that high and low cropping year over a 24-month cycle from an operational perspective. In terms of our 3 core divisions, we report on a segment basis: the Australian olive oil business, which is the most mature of our businesses, and driving the majority of our profitability at this point. The USA olive oil business, which is a business that was started 7 years ago from scratch, and as I'll show you in a slide, we're starting to get material sales and volumes in the USA. And the innovation and value add, which is our well grow business and adding value to our waste streams. As you can see from this slide, we reported an EBITDA this year of $70.3 million, of which 75 was from the Australian olive oil business. The big turnaround from the year before, of course, was the higher crop that I've spoken about, water prices which returned to long-term average, and an increase in net return or value per litre for every drop of olive oil we've sold. The USA business now contributed a small EBITDA profit to the business, up from a loss of $8.1 million last year. As that business matures, our sales increase, our gross margins increase, and of course the benefits from scale. And the innovation and value add, we reduced our loss from 8.6 to 5.3. We continue to invest a lot in R&D in that area, new product development, and we've got certainly a more focused sales strategy. In terms of cash flow, and the reason this is much more consistent than our 1 year profit is because of the way we manage our oil, which I've talked about before, and the consistency of our sales. The working capital line is predominantly in relation to the way we do manage that oil. We reported a $22.1 million operating cash flow before interest and tax, up from $13 million last year. We continue to invest a lot in capital projects for future growth. This year we invested $19 million and $24.2 million the year before. Most of that investment was in production assets, which will continue to drive future growth. In terms of our balance sheet, just a very quick overview. We've got reported assets of $448 million on our balance sheet. A couple of things to note there. Our brands are recorded at cost under accounting standards. You can't revalue the brand, so that just sits there at $6.7 million, which was the purchase price of the Red Island and Cobram Estate brands. And the other important point is our trees are also recorded at cost. So when we plant an olive tree, we capitalise the cost of that tree in the year of planting and the following 4 years, and then we depreciate the value of that tree over the next 20 years. So we don't revalue it to fair value. And the other important point on the liability side, the majority of that is bank debt. We've got $145 million or $140 million of bank debt and another $20 million in lease financing, asset lease financing. The $45 million of that tax liability relates to an historical asset write-up, so it was only ever payable if we sold our assets outside of the group, which we certainly don't intend to in the short term. The other important point, unlike some large agricultural companies, all our groves are freehold owned. We have a very small grove in the US that is leased, but we don't have any leased grove assets sitting on our balance sheet. In terms of sales growth, and this has been a really important part of our business, is continuing to grow packaged goods sales. And as Leandro touched on, one of our growth strategies is to continue to increase the return for every litre we've sold. In these years, we have increased the value for each litre we've sold, but we've also managed to consistently grow sales. You'll see in 2019 we had a flattening off, and that's because we had a severe frost in 2018, which impacted supply. At that point, we invested a lot of money in frost fan protection, and we've now installed over 150 frost fans on our groves and largely eliminated that risk. In terms of just the USA, and Leandro certainly touched on the opportunity there, which we're really excited by. We've been there for over 7 years and we've invested over $100 million in that business. We now have our own grove sites, a processing plant, storage facility, laboratory, sales and marketing office. You'll see here that our packaged goods sales has grown significantly in the last 2 years. Certainly in the short term, we will be constrained by supply. Most of our supply is now going into our packaged goods sales, but we're investing a lot in production assets and working with other local growers to increase that supply over the medium term and really take advantage of the opportunity. We sell product in both Cobram Estate and private label, and private label has been really important to us both in Australia and the US and allowed us to develop good strategic long-term relationships with the retailers. We sell our product in over 13,000 stores right across the country. In terms of outlook for this financial year, we're very positive on the sales outlook, and we've got very strong inventory positions. We're continuing to see the trend towards high quality, healthy fats and oils, which of course we're right up the top, and the consumers trend towards that category. In terms of profitability, the maturing profile of our grove assets will continue to increase our rolling average 2-year EBITDA over time, although our 1-year reported profit for next year will drop materially due to the biennial bearing of the crop, and this is known and expected. We're expecting very strong operating cash flows, and we expect that to increase over the next 12 months. And we have a capital expenditure program for this year to continue to invest in grove assets both in Australia and in the USA. All right, I'll hand it back to you, Aidan. You might have some questions, or there may be some from the floor.
Yeah, definitely. It's been a great presentation. I think it's very helpful for us to understand the business model, especially that biannual production. And for investors, as we look at the next year results, we think, well, why is Cobram fallen off the rails? Well, it's because it's a biannual growth. So it's very important, I think, for investors listening to understand that. And it's great to get that background, as well as some of the financials that might be hidden in the balance sheet, just in the way that the accounting system runs, and it's good to have an understanding of that as well. Firstly, I'll just move into a few questions from me, but there have been some great questions from the audience, so I won't take too much time to dig into those as well. So what I'm going to start with is I'll just ask, why extra virgin olive oil compared to some other oils out there?
I probably can cover that one. I think that fundamentally extra virgin olive oil in general and Cobram Estate in particular tick all the boxes when it comes to modern consumer preferences. It is a natural product obtained with minimum processing, no chemicals, no heat. It is a very sustainable food and a great enhancer of food flavor, particularly for plant-based diets, which are becoming more and more popular. And most importantly, from the health perspective, there's probably no other food with more scientifically documented evidence when it comes down to the prevention and management of chronic disease. If you put it in terms of value, I like to always use the example that if you go to a pharmacy to buy the supplements that are naturally present in a 750 ml bottle of Cobram Estate, you'll probably be paying about $10 worth of squalane, phytosterols, antioxidants, omega-3s, etc., vitamin E that you can find in the bottle. So it's great taste and great value as well.
Yeah, and I can totally understand the society's movement towards wanting to be more healthy and being more health conscious. And that's why I would use Cobram Estate olive oil compared to other olive oils out there, because of that health benefactor compared to some say peanut oil, which probably isn't too good for health. I'll just move on. In terms of what do you think is the main driver of growth in the Australian market? So obviously Sam briefly talked about maturing olives and sort of being hidden by balance sheets. Can you give some more insight there?
Yeah, certainly in terms of the Australian market, there's a lot of upside just from organic growth in production, and that's not based on our capital expansion plans. That's based on just trees that are in the ground and the investment that we've done over the last 5 or 6 years. So we're expecting to see a material increase in production, every year for the next 10 years. And of course, on top of that is being able to sell that oil through our premium position brands and really capitalise on that increased production, and it's really, you know, it's one of our competitive advantages is that, you know, we're able to produce high quality oil right at the bottom of the cost curve, but not only that, sell it for our premium brand, so capture the margin right through the value chain.
Sure. And then obviously that's great for the Australian market. And then let's think about the US market now, because that's probably your biggest opportunity for growth, just based on the presentation, what we'd assume in terms of replicating that. When you say replicating, you know, what you've done in Australia in the US, what does that involve from, you know, now $100 million invested, 150,000 trees there? What needs to be done in that market to, you know, have 70% of, you know, olive oil like you do now in Australia?
Yeah, look, it's really growing the production side. The USA production is actually, for the whole country, is actually less than what Cobram Estate in Australia produces, so it's a reasonably small market. So growing that production side and working over in the US, we work with third-party growers and we process their fruit, and we also have our own grows. So increasing production it will be a combination of our own grow plantings and working with third-party growers, really to increase Californian olive oil production. And then that enables us to capitalise on the trend towards healthy fats and oils and you know, all the consumer trends that Leandro spoke about just before. But it's really in the short term is increasing our production assets, and I think, you know, from a business perspective, we're very comfortable that we've actually proven the concept. We've been there for 7 years now, and we're getting decent scale. And to be limited by production is actually quite pleasing, because it means we're selling all the oil we produce and really will underwrite the investment in future production.
Sure. So as I understand, sorry, you go there.
And to complement that, and in very simple terms, the numbers in terms of yields, in terms of cost of development, in terms of cost of management are actually very, very similar between the US and Australia, but with a higher return per litre in the US, you know, due to the fact that the market is larger and pays a higher premium for locally produced oil.
Okay, well, that's interesting to know as well. And so I'll sort of repeat this, and as I understand, what you're trying to do is increase the production before you then try and increase the demand of olive oil in the US, because you don't want to start putting out some marketing and playing into the health, you know, cycle in the US at the moment in terms of healthy fats when you don't have the production. So in the sort of short and medium term, you're trying to boost that production. So 5-10 years down the track, that's when you can try and play into, you know, that health cycle developing as well.
Yeah, and it'll be a natural evolution. And look, I think the promotion of extra virgin olive oil as a largely benefits us indirectly, you know, no matter when that happens. And we've seen that, you know, particularly in Australia, that we've been a big beneficiary of the growth in the extra virgin olive oil category as a whole. And then, you know, we've also developed a very strong Australian-based, you know, subcategory within the extra virgin olive oil category, and that, you know, that we think that will happen in the US, and it's already starting to happen. And, you know, we're not the only players over there, but there's a really strong preference for local, high quality extra virgin olive oil.
Sure. And then I was going to ask this as a broader question about, you know, both the Australian and US side of things, but I might just focus on the US because it's in some ways a little bit more interesting because it's not as developed as a product really. What do you think your biggest risk will be in the US for the next 12 months or so? And what are you guys sort of doing to manage and counteract that?
Yeah, I think, Leandro, you might want to comment after this, but the key focus is to increase our production assets and to continue to grow the branded side. But there's no one real risk we're concerned about. There's obviously a lot of risks with any business, but the thing that we're worried about is increasing production or increasing olive oil that we can sell, which is a really good problem to have.
Yeah, I mean, certainly supply definitely has been the biggest limiting factor. And obviously, like in any other agricultural operation, any potential climatic events that could affect production is a risk. Fortunately, over there, as Sam said, we're working with a number of growers, and that diversifies a bit the geographical area and the location. So in a sense, you're not putting all your eggs in one basket. And we've been, working hard on securing longer-term contracts with growers that provides a lot more certainty on the supply. So definitely working hard on making sure that potential risk of supply is not there.
Okay, and then just one last question from me before we move on to some more questions. What is your company's sort of waste zero strategy? It was talked about a little bit in terms of reducing water and not sort of holding as much water and just buying it where necessary. What's your strategy there moving forward?
Look, certainly sustainability as a concept wasn't probably front of mind 20 years ago when we started. But being farmers at heart, we probably right from the beginning we place a lot of emphasis on good horticultural practices. Such a careful selection of right growing environments. Use efficient drip irrigation system. Soil moisture check-ins, etc. That really what allow us, in all those horticultural practices, allow us to build a great platform for a more comprehensive, sustainable story that became very critical as our brand, with Cobram Estate in particular, grew in the consideration of the Australian population. So what we have right now, as I said before, is a very efficient and sustainable system with less than 0.1 of our waste streams ended up in landfill. So we are very, very efficient from that point of view. But over the past 5 to 10 years, that was usually coming at a modest cost, to compost the waste and then to apply it back at the groves. With the investment that we have done over the past 5 years, we were aiming at not just at recycling, but upcycling that waste, those waste streams, being able to extract value and turning them from a cost center into a profit center. And we feel that we are pretty close to that inflection point where we're going to start seeing the results of that investment.
Yeah, definitely. And as you think about it, you're better off farming one land over 100 years rather than over farming, one piece of land for 40 and having to go and buy, more land 40 years later. So there's definitely that economic upside to it as well. I'll just move now to some questions from the floor. The first one's actually quite interesting to me. So it compares olives to grapes and the risk of extreme weather, so extreme heat and hail in picking season. Is that the same for olives, and how do you manage that as a company, if so?
Yeah, we actually, again, fortunate in the sense that olives are one of the latest crops to be harvested. The typical harvest period in Australia goes from mid-April to June. So you normally escape a lot of the heat waves and a lot of the issues that come with picking half through a season, including even hailstorms. I mean, being an industrial crop, even if you are affected by hail, although hail could potentially cause a little bit of damage, it's nowhere near the level of damage that you normally get on fresh market crops, like for example apples or pears or things, because slightly damaged fruit doesn't change its value and only marginally compromises the oil content. So it is a very resilient crop in general, and again, the fact that it's also very resilient to handle drought and extreme weather conditions, it's really it has been consistently an advantage over the past 20 years for it.
Okay, that's very interesting to know. And obviously you spoke a little about the frost as well, so I assume that comes in the colder months and counteracting that. So that's good to hear as well. And then there's a question here in terms of changing the varieties of the trees for different reasons. Do you do top work replacement or do you do a complete replant?
Normally complete replant, because in general terms, unlike other crops, olives are self-rooted, so you propagate from cuttings, so the root system is the same genetics like the top. There's no grafting per se, and it's usually a good time at the same time to refresh, rework the soil, add any potential amendments that you may do. So in general terms, it's a full replacement, when it's needed.
Sure. And the next question here, it actually looks a little bit more global. It's asking who's the largest importing nation of olive oil, and is there the potential for the Australian production to cover that? I think that's what the question's sort of getting at, and it's quite a long-term question. But is that sort of, in the commercial framework of the business at the moment, or are you really just focused on the US?
Yeah, look, the US, I mean, the US per se is the largest net importer of olive oil in the world. I mean, you know, Italy is technically the largest importer, but it's also the largest exporter. So it's a bit of a funny one. They import a lot, but they export a lot. And that's why a lot of so-called Italian oil is really oil coming from other places that has been bottled in Italy and labeled as Italian, but it is not. So the largest net importing market is the USA, and that's why we sort of put a lot of the emphasis and focus there. But having said that, because the supply of oil in Australia has been also a limiting factor for us, probably only as more and more production becomes available, that will allow us to explore high return export market opportunities, where obviously the US is a natural one, but so it is Japan or China or Canada, so some of those other growing markets that, you know, normally pay good return per litre.
Sure. And one final question here, it's probably for you, Sam. So it's actually referring to Select Harvest, so the almond grower. They've adjusted their financial calendar to have an actual measure of their annual crop, rather than having to take an estimate. What do you do and why?
Yeah, and it's a good point. Select Harvest, they will have harvested by 30 June, and then they crack out a lot of their nuts, which is, I suspect, why they pushed their balance date to 30 September, I think it is. In terms of us, when we finished harvest, about 4 hours after we finished harvest, we've also finished pressing the fruit, and that oil just sits in the tank, and that's it. There's no further processing. That's the oil that we have to sell. So we know precisely at 30 June how much oil we've harvested from that harvest year. So 30 June actually works pretty well for us, purely because there's no further processing of our produce.
Sure. Well, I think there's many more questions that I sort of have off the back of this webinar, and I'm sure lots of the viewers do as well. But, you know, in terms of time, we're probably going to have to leave it there for the day. Just as a summary, you know, obviously Cobram's got, you know, a great cash flow within Australia and got the market there. 70% of market share is a great thing to see. But also that growth upside in the US is obviously a risk that you guys are taking, but, you know, hopefully one that's worthwhile. And it's definitely worth, you know, seeing that over the long term and considering it as an investment. For clients that are watching, feel free to reach out and, you know, ask any more questions. And for anyone else as well who's tuning in, feel free to reach out and ask questions. Thank you so much, Sam and Leandro, for joining me today. It's been very beneficial for me to learn about Cobram, and I'm going to enjoy my Cobram garlic infused olive oil that little bit more now, having spoken with you. And yeah, I hope you have a great afternoon.
You too. Thank you so much.
Yeah, really enjoyed the chat, and appreciate the opportunity to speak to some of your clients.
Not a problem. And yeah, feel free to ask any more questions, clients, via email. Thanks for tuning in, guys, and I look forward to seeing you next time. Thanks and bye.
See ya.